First of all, to the Bitcoin maxi.
We're not done. We're not done.
I know what you're thinking. Dogecoin is a joke and people should only invest in Bitcoin. But just hear me out and have an open mind.
Let me tell you something.
Because nothing great happens without both cooperation and competition. Also, we share a common enemy, the boring, corrupt, greedy traditional finance system. This video is not about saying that Dogecoin is better than Bitcoin, but rather that they are more similar than different, and we should celebrate our similarities instead of bickering so that we can build a better crypto space together for the future of humanity.
How do you tell a good bread is without tasting it? Not the smell, not the look, but the sound, the crust, listen.
It might sound cliche or cheesy, but the future freedoms of humanity really do rely on cryptocurrency, because the governments around the world are developing CBDCs and they will use it to program your money, meaning that your money will be in complete control of the government, and so will everything that you do. So let me tell you how these two projects are pieces of the same puzzle that is the future of crypto, but first let me dispel some myths about Dogecoin. The first one is easy. A lot of people, Elon Musk included, have stated in the past that Dogecoin is too centralized because 20-something% of all the Dogecoin in existence is held inside the same wallet.
Too much concentration is the only real issue. IMO. The only real issue. See, he loves Doge. He loves it so much.
In the days since this myth was circulated through the crypto community, it has been revealed that Robinhood is actually the owner of that wallet, meaning that the Dogecoin in that wallet is really held by Robinhood investors. And while that does mean that if Robinhood went out of business, a lot of that Dogecoin would be dumped on the market, the same is true for Bitcoin because exchanges do hold a large quantity of Bitcoin, and if it got dumped on the market, that would tank the price of Bitcoin as well. Also, and this one might be a little bit silly, but a lot of people say that Dogecoin's mascot is really stupid and there's no reason to have a dog as the face on our money. But for a global currency, I think a dog makes more sense than a dead president for one. And dogs have been used as a commodity for trading, essentially as a currency in the past throughout human history, before we even put money on coins. Furthermore, people have claimed that Dogecoin has an unlimited supply, and while there's technically no hard cap, there is a soft cap in the form of a set limit on how many coins can be created annually. It's always the same number of coins every single year, and that means that the inflation is a decreasing percentage of the total supply of coins as time goes on, making it decreasingly inflationary over time. This leads us into the comparisons and similarities between Dogecoin and Bitcoin.
The Crypto Trilemma.
In cryptocurrency, there are three things that are the bane of crypto developers because it's almost impossible to have all three, yet all three are vital for the functionality of a cryptocurrency project. These three things consist of decentralization, security, and scalability. They are known as the Crypto Trilemma.
Number 1, decentralization.
I already talked about the centralization of wallets a little bit, but a lot of projects are centralized because the creator of the blockchain holds most of the cryptocurrency in existence. Bitcoin was created by Satoshi Nakamoto from the ground up with contributions from earlier technological breakthroughs, whereas Dogecoin was basically just copied from Bitcoin and it was done by memers. Satoshi Nakamoto disappeared, and while he does still own technically around 1 million Bitcoin, everyone pretty much agrees that he's probably dead and that Bitcoin is basically burned, so he supposedly doesn't have control over a large portion of that supply anymore. Dogecoin was created by Jackson Palmer and Billy Marcus back in 2013 to make fun of the ICO boom. A few years later, for reasons I'll discuss in another video, Jackson abandoned the project, giving control of the project to the developers, offloading all of his coins, and now he hates his creation and all of cryptocurrency. Billy Marcus also unloaded his coins, stepping back from the project for several years, and neither one of them made a significant profit. Both projects' creators are no longer in control of the future developments of the network. This is rare in the crypto space, and it means that they were both truly given to the people. Neither Bitcoin or Dogecoin's development teams are run by a central organization or business. This means that there's no centralized entity controlling the project or representing a single point of vulnerability when it comes to manipulation or attacks on the network or the roadmap of the project under government orders or for personal gain. Bitcoin is currently running on around 15,000 nodes, while Dogecoin does only have just over 1,000. With some quick math, you can probably see that Bitcoin has roughly 15 times the number of nodes as Dogecoin,
Quick maths.
But since Bitcoin's market cap is almost 50 times the market cap of Dogecoin, I guess Doge isn't doing that bad after all.
Smoke trees.
As the crypto space continues to mature and these projects continue to grow, so will the number of nodes and the decentralization of the power on the network. And more nodes means more decentralization, but it's also vital for our next point, which is
Number 2, security.
due to the large number of nodes in the Bitcoin network, it is undeniably more secure than Dogecoin. However, neither Bitcoin or Dogecoin has ever suffered a successful 51% attack or been hacked successfully. Both of these networks have proven themselves, and though many others have failed, these two have passed the test of time.
Number 3, scalability.
At the base layer, Bitcoin can handle roughly 3 to 7 transactions per second with an average transaction confirmation time of 10 minutes. Dogecoin, on the other hand, can handle 30 transactions per second with a 1-minute transaction confirmation time. This makes Dogecoin about 10 times faster and able to handle 10 times more transactions without the assistance from a layer 2 network. While there may be crypto projects that excel in one or two of these factors, all three are very important, and I think that both Bitcoin and Dogecoin strike a pretty good balance on all three. Bitcoin does have a much larger network and therefore better security, but Dogecoin has a faster block time and is therefore more scalable at the base layer. It's called the Crypto Trilemma because it's hard to get all three balanced, and it's never going to be perfect, but I think that these two coins are getting pretty close. All these things are vital for the functionality of a cryptocurrency, but just because a cryptocurrency does well with the Crypto Trilemma, that doesn't mean that people will actually see it as a good form of money and use it as a currency. For this, we need to look into three more things, and these things constitute
The 3 functions of money.
If we want cryptocurrency to function as money, we need it to fulfill the 3 functions of money. Working as a medium of exchange and a store of value are 2 of these functions, and the third is to be a unit of account. These are the 3 things cryptocurrency needs to become if it's going to ever replace the traditional fiat monetary system or protect us from government program money. Let's see how Dogecoin and Bitcoin both stand up against these 3 variables, starting with the easy one.
Number 1, unit of account.
To be a unit of account means that basically something can be priced in the currency, such as a cup of coffee is $5, and while you can do this with both Bitcoin and Dogecoin, $5 worth of Bitcoin at current prices is about 0.0002 Bitcoin, which is pretty confusing obviously. A single Bitcoin, of course, can be broken down into 100 million Satoshi, which have been compared to cents for the dollar, and that would make the price of a cup of coffee roughly 20,000 Satoshi. But that's still more confusing and it's extra math, so I think it would just be easier to say that the cup of coffee is 83 Dogecoin. This is obviously debatable, but both Bitcoin and Dogecoin work as a unit of account, and that's what really matters, so let's go ahead and move on to
Number 2, store of value.
With Bitcoin's very low inflation rate only continuing to decline at a rapid rate, having every 4 years or so, it's obviously a pretty great store of value. Some analysts will say that the volatility makes it a poor store of value, but as the cryptocurrency space gains mainstream adoption, it will become less volatile and a greater store of value over time. Dogecoin is decreasingly inflationary, but it does have a higher inflation rate than Bitcoin. However, the developers are also working on a staking mechanism to reward the community members for hodling. Over time, both of these coins will become a better place to store value, but right now I'm going to give this one to Bitcoin because of its future inflation rate being so much lower than Dogecoin. Being a great store of value is very important, and to some people, that's all that matters. But to fill the role and replace the functionality of the dollar in case of its collapse, or to escape the control of a CBDC, and for cryptocurrency to replace the traditional fiat monetary system, we needed to fulfill all 3 of these functions of money.
Number 3, medium of exchange.
Every 4 years or so, the Bitcoin network experiences what's called a halving, where the reward for solving a block is cut in half, meaning that the inflation rate for Bitcoin is cut in half every 4 years or so. Many people say that Bitcoin is deflationary, but currently the inflation rate is about 1.7% as of 2022. Dogecoin has an inflation rate of exactly 5 billion Doge per year. This means that over time, it becomes less of a percentage of the total number of coins, and according to this graph, currently the inflation rate is about 3.7% as of 2022. Before Bitcoin's last halving, it had an inflation rate of 3.5%, and just after the previous halving before that, it was 4.1% because the Bitcoin supply has decreasing inflation even between halvings. Accordingly, if you believe that Bitcoin was a viable investment before its last halving, then you can't really argue that Dogecoin has too much inflation to be a viable investment either. When the velocity of money is too low and people aren't using the dollar, the Fed prints money to stimulate the economy, causing higher inflation. Similarly, in the beginning of Bitcoin, the inflation rate was much higher than it is now, and this made it easier to acquire Bitcoin and incentivized people to use it. This stimulated the Bitcoin economy. Dogecoin might be behind Bitcoin's curve in this way, but there's no way to change the inflation curve for these coins. So what matters is where it's headed. Over the next 20 years, by 2042, the Bitcoin inflation rate will decrease to 0.48%, and the inflation rate for Dogecoin will decrease to 2.1%. Currently, the inflation rate for both of these coins is significantly below the inflation rate for the US dollar, and some people speculate that the inflation rate for the dollar will only continue to climb. If you're invested in Bitcoin, you might follow the Austrian School of Economics, but some of the smartest people in the world think that a 2% inflation rate is the goal that we should be aiming for with the US dollar, because it's just enough inflation to incentivize people to spend money, but not so much to where people can't save money. Austrian economists believe that any taxation is theft, and inflation is a form of taxation, so therefore inflation is theft, but Bitcoin experiences inflation as well. The question is it enough to stimulate the velocity of the currency so that people can use it as a medium of exchange and not just a store of value? Or will it remain in such high demand that people continue to only save it as an investment rather than spending it like a real currency? Crypto transaction fees can fluctuate. The average transaction fee for Bitcoin transactions have recently been just above $1, but back in April they were at an all-time high of about $62. Dogecoin, however, according to BitInfo charts, has had an average historical transaction fee of just 0.46 Doge or $0.03. That's just 3 cents. Also, Bitcoin has a current block rate of about 10 minutes per block, meaning that it takes about 10 minutes to verify a transaction. Dogecoin, on the other hand, has a block rate of about 1 minute, meaning that a transaction can be verified much faster. I can already hear the Bitcoin maxis screaming about the Lightning Network because it's supposed to exponentially increase the speed of the Bitcoin network, potentially even making it faster than the Dogecoin network is currently. However, since Dogecoin was based off of Bitcoin, it can get many of the same upgrades as the Bitcoin network receives, including possibly even the Lightning Network. For example, I asked one of the Dogecoin core developers who has since retired about Dogecoin receiving a similar Taproot style upgrade to improve the privacy on the network like Bitcoin did. This is what he had to say.
Mike Crypto asks, will Doge be getting a Taproot style upgrade like BTC? The code for Taproot is disabled but present in 121. So post 121, the Foundation could do that, yes. They have, as far as I'm aware, not even started thinking about it, let alone have a conclusion on it. Yeah.
It didn't sound like the developers were in very much of a rush to adopt a similar Taproot style upgrade for the Dogecoin network, and it would probably be a while before a Lightning network was implemented as well. But if Dogecoin does get a Lightning network, it will also be able to increase its speed and lower its fees in a proportional way to Bitcoin. The developers being slow to adopt changes to the network can be a really good thing, because if Bitcoin implements them first, then it can basically act as a test network for Dogecoin in a similar way that Kusama does for Polkadot. Also, because all of the things that I've discussed in this video have been really important, but if the developers are quick to adopt a change for quick gains, then none of it matters because it could change at a moment's notice. For example, many people have tried to get the Dogecoin developers to set up a burn to increase the price of the coin and make quick profits, which doesn't lend itself to the long-term goals of the project. Fortunately, the developers have been wary of hard changes to the network, and that's great for the long-term sustainability of the project's fundamentals. With Dogecoin's inflation rate remaining closer to 2% over time and the ability to verify transactions on a Lightning-style network that could be even faster than Bitcoin's, not to mention the lower fees, I would argue that Dogecoin could be a more viable option as a medium of exchange than Bitcoin. Because Dogecoin was derived from the Bitcoin source code, it has inherited many of the same things that made Bitcoin so powerful over the years. Dogecoin did start as a joke, and it was made from Bitcoin, but it has become its own unique project whose functionality happens to fill many of the check marks for a great project. I could see a future for cryptocurrency where Bitcoin does act as digital gold and people can save it as a store of wealth for larger transactions like with a savings account, utilizing its stronger security. And Dogecoin could be used for smaller transactions and to store money for short-term use like with a checking account, utilizing its lower fees and faster transaction speeds. Then Ethereum could be more like a business account where you run a business through smart contracts on the network, utilizing its programmability.
Proof of stake is hard, but what I do know is when we learn a shard, we'll change the whole game, though.
And so, sticking with the theme of threes throughout this video, I would like to suggest that there could be 3 coins to rule the world, and those coins could be Bitcoin, Ethereum, and Doge, because they've all put in their time together, and all 3 communities continue to grow through the years as other coins who claim to be Bitcoin, Ethereum, and Dogecoin killers all come and go, but no one can beat the 3 musketeers. At the end of the day, all we have is our savings, our business, and our dog. And that's what most men care about. Plus family, but savings, business, and dogs is how you keep the family happy. So to make your family happy, go out and pick up a new dog. And by getting a new dog, I mean Dogecoin, obviously. I don't mean to go pick up a new dog, really. But I'm not saying not to pick up a new dog either. I mean, who doesn't love dogs? They're so cute. Anyway, thank you guys so much for watching, and I hope you have a wonderful day. I'll see you guys next time. Bye.